Hello and welcome to your Daily Five. My name's Erin Swenlin from DecisionPoint.com, and I'm going to share with you the 5 charts that I think that you should be paying attention to moving into this week. I wanted to let you know that we do have 2 subscriptions available, the DecisionPoint Alert and DecisionPoint Diamonds. DecisionPoint Alert is going to give you everything you need to know about the market, be in the know what the executives know, and find out using the DP alert for market trend and condition. DecisionPoint Diamonds is going to give you access to 10 stock picks per week, including ETF day, which is 3 ETFs. If you want to try out either of these or both of them, just use coupon code DPTrial2 and you will get access for 2 weeks free to either of these reports. So the title of my presentation does insinuate that we could see a reversal coming up. And everybody knows that at DP, we tend to be more bearish, but we have to look at when we get bullish indicators, when things start to look interesting, when we're starting to see divergences, it's time for us to pivot and at least consider what might be a possible reversal. So let's start with the daily 1-year chart. And I pulled the 1 year because on the 5-month chart, you cannot see support. We've had that kind of a decline. Obviously, we've all been feeling it. We're getting a rally on today, Monday, which is when I'm recording this. And I think that this is an area where we could very well see some type of a reversal. I am more of the opinion that we're going to move down a bit lower toward 400 before we get that reversal. But seasonally, the end of October, beginning of November, we should expect to see some kind of positive price action. The PMO is starting to decelerate, and you can see stochastics did turn up slightly. We are in a big decline here. So where are we going to find some interesting information that would lead us to believe that we could see a reversal? We did see blowout volume the last 2 days going into this rally. And so it tells us that we are at an exhaustion point, that it was time to see a bit of a reversal here. The Swenlin trading oscillators are our short-term indicators, primary indicators, and the ITBM, ITVM, intermediate breadth momentum, and intermediate term volume momentum. These indicators are our primary indicators, and they're telling us some very interesting pieces of information. The first are the Swenlin trading oscillators. These are the shorter term ones. And as you can see, despite 2 really strong days of decline, the Swenlin trading oscillators turned up. So that is saying something is going on under the surface here. And they're typically pretty good indicators of when we get these short-term bounces. You can see that these lows on this indicator tend to line up fairly well with reversal points. And this tells me that we could be at a reversal point right now. The intermediate term indicators are still in decline. So that is a problem. That suggests that we still could see more downside after this reversal. Think of something similar to what we had here, either a really short reversal or a longer one, but back into our decline. Reversal to the upside, then back into the decline. I suspect that's what we're going to experience moving forward here. But right now, it does look like we're at a reversal point based on our short-term indicators. But they're not the only ones telling us some interesting information about a reversal. The Golden Cross Index and the Silver Cross Index are also starting to flash that we could see a reversal. Now, the actual indicators themselves aren't looking that great. The intermediate term Silver Cross Index is still in decline along with the Golden Cross Index. Just so you know, the Silver Cross Index measures how many stocks within the index have a 20-day EMA above the 50-day EMA. So we're looking at all the stocks within the SPY and how many of them have a 20 above their 50. And right now that's at 17%. That's very, very low. That's very, very weak. But the one thing we can say is that this reading is oversold. And so when you hit certain levels, oversold levels, there's really nowhere else you can go but up. We're not quite there on the Silver Cross Index, but we're getting close. This was the really interesting information that we saw last week to finish the week on those big declines as well. The first big decline, we actually saw an expansion of stocks above their 20-day EMA. Really shocking. We also saw paring back. I don't have the chart, but we saw new highs and we saw new lows paring back on a big decline. We actually got less new lows. This is really starting to look like a possible reversal area. You've got positive divergences now as well on percent stocks above their 20 EMA and above their 50 EMA. Rising bottoms. These are all great signs that we should be looking at a reversal coming in soon. I just would say, given the look of this Golden Cross Index and the fact that this Silver Cross Index is oversold but still very weak, I would expect that any rally we do experience will likely not be more than what we've seen prior before we get another decline. So it'll be interesting to see how this week shapes up. One of the areas of the market that I also think looks good is the materials sector, XLB. Most of the sectors have declining PMOs, and with the exception, I think, of utilities are rising, and I think staples just started to get a rising PMO. Materials are getting a rising PMO as well. But the difference between it and most of those other sectors is we're getting an expansion in participation. Notice that we're getting more stocks above their 20-day EMA, more stocks above their 50-day EMA. Now, these readings are still very low, but ultimately, I still would think that we're going to get some upside out of this sector. We do see some broadening. That's important. Stochastics are rising, and then look at the relative strength of materials going into this week. Really looking good. Nice little bottom. If you look at the price patterns on the other sectors, none of them are going to impress you quite as much as materials right now. Within materials, I found steel looks really good. We've got a nice V bottom on steel. V bottoms do suggest once you trace 1/3 of the left side that you will get a breakout from that left side. So this really implies that we're going to see a move that will come back and take us toward those summer tops that we had back in August and July. The PMO is about ready to give us a crossover buy signal, and you can see that the stochastics are rising quite nicely on this steel chart. RSI is still negative, but if we get this rally to continue a bit longer, we should see it move into positive territory. That's all I've got for you. Again, my name is Erin Swenlin with DecisionPoint.com. I hope to see you on board with DecisionPoint Diamonds or our DecisionPoint Alert. Good luck and good trading.